Hey everybody, still here, Daily Market Pulse. It's Wednesday, June 11, 2014. So we saw stocks lower, but they did come off their lows for the day. Volume was actually higher on the NASDAQ, but lower on the New York Stock Exchange. But with that said, NASDAQ didn't drop that much, it only dropped about a tenth of a percent, so consequently no distribution day on that higher volume. Selling for today. So with that, NASDAQ, I don't know if we've got an updated chart that actually shows us the drop. There was a little bit of a drop there as well on the NASDAQ. Everything still looks to the upside, but we're simply looking for a pullback, a little bit of a dip after all this profit uh, before a resumption to the upside. Here's the pullback here into the window, 8 moving average on the S&P. We expected something like that right there. Could come a little bit lower still. I don't think 1900 is expected. 1920 maybe. 1925 is possible, but this already could be over. Could be down already. So that's the Dow Jones, S&P. Let's look at the Nasdaq. The Nasdaq, you see a gap lower and then finished green candle, but it's actually red for the day, but only about a tenth of a percent. There's still room to the window below at about 4,300. Possible 4250 drop as well, but the 8 moving average is right at the window as well. So I'm again expecting that it may not come too much lower. TSX, after a series of green candles at the upside, still looking for 15,000, stops and pauses at least temporarily. May pull back as a little bit of a dip, as mentioned, where a breakout area near 14.8 may occur. Still looking for 15,000 ultimately, despite any kind of a dip forthcoming. And then we have the US dollar, Canadian dollar, still stuck between moving averages and jam, but looking for likely a bias on the upside, 110. And of course, as high as 112.50 at some point or another is always likely and possible. The euro still testing and retesting the lower shadow from just a few days back. In fact, I think today's action was pretty much right where it is now, or where it was yesterday. That's yesterday's candle right there with 135.50 to 135.35. It's still not gone any lower than that. Could retest 135, but it's kind of looking after 4 red candles that it might actually pause and look for a reversal to the upside. Treasuries, we knew with the pullback in the markets, they may find a bounce occurring, especially at a support level. 50-day moving averages there, pivot areas there as well. So there was the bounce, a little bit of a come off the high right there, just like the markets came off their lows. Still possible that this could go a little bit higher. We're looking at 135 first as resistance and 136 next, but likely 135 stronger of the two. Anything below 134, you're going much lower, but of course we'll see that in the market's already bouncing higher at that point, right? And then the next would be Japanese yen, still kind of stuck and jammed. This actually is yesterday's candle. This actually has come up and over the 50 and looking like, I believe it closed over that little trend line that I got above that little channel. So I think it's over the 50-day moving average already. So looking for a possible moving higher into 99 levels. Once again, there it is. There's a green candle. So that's looking like it's likely going to go higher. Gold had bounced reasonably well yesterday and a little bit of a move today as well. So it goes up, sideways, up, kind of sideways. Today was a little bit of a sideways. There it is with room to 1280 still remaining as it stair steps its way higher. And same thing with silver. Silver never dropped below May's low and did similar to what gold just did, up, sideways, up, and then today sideways with a slightly higher high as well. With crude having inventories today, it was a volatile day. It moved higher initially and then faded all the way back to where its starting point was pre-inventory. So that's yesterday's candle you see there. Today's candle not too dissimilar to this one from yesterday. It looks a lot of the same, just kind of settling here at 104.35 to 104.50. Just pausing, profit taking, sitting right on a polarity, looking for a move into 108 to 110 ultimately on the upside. Let's skip right over to small caps. And small caps, of course, like anything else right now, has dropped in price. That is yesterday's candle. Today's has dropped down into 116 and toward 115 as well. So looking for that window at 115 as support. 115, 116 down to 115 is the support area expected. We're not seeing the candle for whatever reason. It's not there, but just Trust me on that one. It's down in this area. In fact, I'll just take it a 15-minute chart, I guess what I'll do. So there's the drop. Let me do this here just to make sure we're accurate. There it is. So down, it came to a low of 115.47 and settled at 116. That is yesterday. That's today, right? Okay, good. 116, so it's down at the low of yesterday. I went right at 116, so there it is. So looking like possibly lower still is still in the cards. And let's move over to the VIX. The VIX with the markets down bounced a little bit, but nothing really threatening as of yet. Into 1170 with room still to 12 and 1250. There is a trend line, of course, coming down off the tops. You can see that right there through there. The top trend line right there, that's still intact. Let's brighten that up a little bit like that. There's your trend line for now. So it's channeling lower, as you can see. You don't see that often, but it's happening right now. So it's at the top. If it breaks out, like I said, then you're looking at probably about 1250 as the target area. If it goes any higher than that, then you look at 14 to 1450. But really, that would mean a lot of selling in the markets, and I just don't see that happening right now anyway. There's no evidence of that yet.